I do believe that on Wednesday, the June employment levels in the UK will have the same effect as what we were discussing a few ago on inflation. We're talking about June and May figures, right? These are pre-Brexit numbers and are quite irrelevant in the ongoing scenario for the pound. But keep in mind that employment is employment, and always a positive number can push the price higher, and a bad number can put the pound under further pressure. Furthermore, I do believe that the dominant trend in the pound is bearish. Sorry, bears are in control of a pound, which means that if data is in line with market sentiment, the reaction would probably be more interesting than if the numbers, macroeconomic numbers, are contrarian to the market sentiment, right? But anyway, jumping down to Thursday, the main event, of course, will be the ECB interest rate decision. We also have retail sales in the UK. Goes the same for what I have just said for employment and what I did before on inflation, right? If numbers are in line and market expectations were above, we were going to see little reaction. If they're extremely negative, the pound will be more sensitive to those numbers. Anyway, back to the ECB, which is probably one of the main events. I do believe the market is putting too much expectations on this meeting. The ECB is still implementing their latest decisions, their latest announcement, the full bazooka launch earlier this year. So we are not expecting them to take any new measure, right? They are not going to cut rates. They're not going to extend easing. The most we can see is Draghi talking about the consequence of a Brexit, uh, or maybe even being more dovish, talking about expanding quantitative easing. I don't know. I don't believe so. I don't believe he would do anything. I'm, I do believe that we are going to have a non-event this week with the ECB, right? Not really much more action, which could leave the euro in this limited range we are seeing since the end of June. Uh, Following that report, we have some minor figures in the US, initial and continued jobless claims, existing houses sales, and existing home sales, sorry, and the lead indicator. So, as I said, not much relevant data coming from the US this week. And on Friday, I do believe that we are going to get a much more interesting price action from the euro than on Thursday with the ECB, because we have all the preliminary July manufacturing services and composite figures of market PMIs from most major economies, the euro region, and as an exception, right, as an exception, we will have preliminary figures for the UK. This is not something that happens every month. This is something market has prepared especially due to the Brexit. So beware of these numbers. If we're talking about July for the composite services and manufacturing PMIs, I could expect big plummets here, right? Big falls because of loss of confidence after Brexit, right? Among producers and manufacturers. So this could bring some more action to the euro than the ECB, as I was saying. And of course, these readings from the UK will take center stage. They are already expected below 50. 50 is the line that divides contraction from expansion in economy. But I would dare to say that we are going to see much worse numbers than these two we're expecting here, right? Mostly, as I would say, because the decrease in confidence the market has in the local economy, in the European general economy, after the latest political developments, right? Anyway, later on the day, we have Canada inflation data expected to tick modestly lower, which should not come as a surprise given that that's what happened with US inflation, right? We have a mix of numbers, not as positive as we would like to hear, but mostly in line with previous and with market expectations. To close the week, we have the preliminary July reading for the manufacturing sector in the US, expected slightly positive. I do believe that uh, we need a really shocking increase in the year to push the dollar higher. Anyway, and back to dollar. The fact is that the greenback is trading pretty strong across the board and against most of its major rivals, particularly because data has been supportive of growth in the US. We have had fears of a global economic slowdown by the end of 2015, triggered by China. The slowdown in economic readings extended into the first quarter, but what we are seeing this 2 months almost is that US data has picked up during the second quarter, right? We are seeing more stronger numbers, inflation, in producer prices in manufacturing, in factory orders, in employment also. After the May terrible employment reading, we have the June outstanding number, right? So in general, what's supporting the greenback right now is not risk aversion or its safe haven condition, but the fact that American data is coming strong, and that is reviving hopes that the Fed may raise rates. I don't know, maybe next year, right? Because after Brexit and all of the easing going on through the world, uh, expectations have turned to late 2017, sorry, or even early 2019. But now the fact that US data is positive, right, is reviving hopes that the Fed may act. I'm not sure. I wouldn't dare to say this year, but at least at the beginning of the next one, okay?